Yeah, I mean, the general trend in Germany is that there are less banks available. There's no question about that. Margins have increased quite dramatically over the last 4 or 5 years, effectively. From our point of view as a REIT, where you by definition have relatively high equity, so by law you have to have equity of 45%, so the LTVs are anywhere between 50-60%. We have no issue with financing at attractive margins. So for us, it's not an issue. But generally, the market, since banks are becoming obviously less and less, there are basically no foreign banks active in Germany across the board. It is an issue, and it continues to be an issue. I think the capital markets are continuously playing a larger role, even in Germany. I mean, Germany is not equity culture per definition, but if you hear examples, the 200 million in 5 minutes being placed on the residential side, I think we're going to continue to see IPOs. I mean, German or Deutsche Annington is in the starting block, as everyone can read in the paper. I think we'll see 1 or 2 others. We'll see some commercial and maybe even office IPOs in the course of this year. So, and that's mostly for deleveraging. So I think the capital markets will play a larger role. We'll see the CMBS market. I'm not, that nitty-pitty in terms of defining the market, but one of the reasons that the German financial or the banking market has always done reasonably well is because of the mortgage, the Pfandbriefe, the Hypothekenbriefe in the German market. That has always worked well, even through the crisis. So banks have always been able to refinance themselves. So it's not a new product from a German point of view. And I think the larger scale CMBSs will come back in the next 18 months. I'm pretty certain of that. So there's a little bit of everything. Bank lending will go down. It will be a little bit more difficult, but it's still available. And especially, if you're at 50, 60 LTV, every good product will get financed. I have no issues with that. I think the capital market will surprisingly, even from a German point of view, will play a larger role. I think we'll see more bond issuance, even in the real estate side. That's something we haven't seen in the past, but I think that's something that's going to pick up even in Germany. So there's a little bit of everything, and I'm not really worried from a financing point of view. Even in the last couple of years, every good product has found the money to finance it. If you want 100% leverage, it's not going to work. Obviously, I think those times are past, and rightfully so. But good product at a good LTV. If you bring equity to the table, you'll get financing in Germany, and I think that's going to continue the next years.
From our financing side, we have LTVs of also around 50-60%, but that's not an issue to get financing. But as I mentioned earlier, you have to know the local savings banks. You cannot go to the big commercial German banks that you might be well known for the past. Some of the banks are out of the market completely. Eurohyper is one of the examples now, Hypothekenbank Frankfurt. So there are some changes in the market to the local banks that they are happily to do financing on real estate in their local markets. They know the market well, they know the surroundings. So it's if you have a good connection with them, it's very easy to get the financing arranged at the end. To add a little bit on the Pfandbrief, on the mortgage Pfandbrief side is, you see a lot of international banks now trying to build up Pfandbrief desks in Germany. Natixis is one of the banks that try now to build a Pfandbrief desk in Germany to use this refinancing tool that might draw some international banks back into Germany, because in Germany you have the people, the expertise to do the valuations in order to execute these things that might help to bring some banks back to Germany, some international banks in the, let's say, 12 to 18 months time possibly. That might be one of the things helping to get a little bit of more competition on the financing side. At the same time, you have to say, if you have a good quality product, competition is high already. The banks, they're not beating them down to very low margins, but the margins go down considerably. Especially you have still the life insurance companies. If you have a big deal, big assets, life insurance companies will be happy to finance it. For them, it's an alternative way to go for real estate.
If the product stacks up and you're not looking for a loan to value in excess of 60%, there's no shortage of people who provide it, and certainly the local banking community has been more than willing also to finance construction. So I think that's certainly the case in a residential development opportunity in Hamburg. There was a queue of banks, and in the period of 18 months we saw the value expectations for the resi, it's prime resi, went up by about 40% over an 18-month period. There's a huge amount of demand for first-class development opportunities because there's a real shortage of stock.
And is that just in resi that people are happy to lend on developments?
Yeah,
or is
right
that-
across the board, whether resi, retail or logistics.
Okay.